What's going on, guys? In this video, we're going to talk about when you should sell a stock. The reason why I'm doing this video is because I just had a conversation with one of my friends from college. Started investing a couple of months ago, probably 4 or 5 months ago now, and just like a lot of new investors, he's experiencing his first downturn or first significant pullback. Now, this scares him a little bit because starting in March of 2020, we have seen the best run-up for the S&P 500 in all of history. It has never ran up this quickly, so it skewed a lot of perceptions for new investors. So we start to see it go down. He's not used to losing money that way. What does he do? He panics and he sells some of his shares. Ironically enough, he sold the same 2 shares that I just bought the very next day, or the very next trading day. He texted me saying that he sold Apple and Nvidia on Friday, which was September 4th, 2020. And today, September 8th, 2020, the day after Labor Day, I just bought Apple and Nvidia because we're seeing some nice pullback. So here's the problem with new investors, and no fault of your own. It's just you don't know how the market works yet. You don't understand when it goes down. You get scared. Emotions come into play. But just because the market's going down, you shouldn't be selling your shares. And if you're younger, like around my age or in your 30s, you may ask, well, when do I sell my shares? Do I just hold on to them forever? Here's when you should sell your shares, and it's summed up in this tweet by Investing with Nigel right here. If you need the cash, if the business's fundamentals have changed, or if there are better investment options out there. That sums it up. There's no reason you should sell your shares just because there's some pullback. As long as you have money in your checking account and money in your savings account, and you don't need that money right now, don't worry about that pullback. I mean, we've heard it from so many people, Warren Buffett, all of these other experienced investors. Just because there's a little bit of pullback doesn't mean you go and sell your shares right away. If you're in it for the long haul, and I mean your investing horizon is more than 10 years, then yeah, follow these 3 rules. You should never sell your stocks unless you need the cash, if the business's fundamentals have changed, or if there's a better investment option out there. Now, if you're in your 40s or 50s, it's a little bit different. You know, some things might be different for you. You might want to sell if you want to take some profit. Maybe your goal is to save money for your kid for college, and 18 years is up and you've made them a lot of money. Now they're ready to go to college. Yeah, that's a different scenario. But we're talking about your retirement. We're talking about you're in your prime, you're in your 20s or 30s, and you're not looking to sell for 30 or 40 years. You're looking to build up this mass amount of wealth so you can retire a multi-millionaire, right? And the way to do that is to not freak out during downturns. So let's jump onto the computer. And here's the S&P. Yeah, that's looking scary to a lot of people. We hit a high September 2nd, around $358. This is the ETF. And it dropped all the way down to 333. The last time it was this low was back in August. So back in August 20th. So that's 3 weeks worth of investments gone in the matter of 3 days, right? But if we scroll out, this is nothing. This is healthy. All of you new investors who were lucky enough to start at the bottom over here, let me make this look nicer. There we go. For all you investors who got in April, May, March, April, May, and anyone who started watching my channel, I know I got a lot of friends involved in the stock market down here, and they've been making a lot of money. It's been riding up, and they think that, man, investing's easy. You guys weren't here. You guys weren't back in February watching your account plummet 20 or even 30%, depending on which positions you were holding on to. That's scary, okay? And there's a lot of people that sold. All of these red candlesticks you see are people selling. And they made some bad mistakes. There were people selling here. There were people selling here. And then the market bounced back up. So look, when you were 20 or 30 years old, don't get scared by this. Get greedy, get happy. This is Black Friday, okay? These are discounts. This is when the stock market is on a discount. You don't walk into a store and you want to buy something and you're thinking, ooh, it's 10% off. You know what? I'll wait until that discount ends. No, if you want it, you're going to be like, this is great. It's 10% off. That's the market right now. The market is 10, 15, 20% off, whatever it might be, depending on the stock you're looking at. Look at it like a discount. Because just because the market goes down doesn't mean the business's fundamentals are changing, okay? Let's jump back to the computer. You got to think. Look it back over here. September, this was in 2018. I remember back in 2018 when October hit, usually October is when the market will run up. It's called the Santa rally because third quarter, fourth quarter is near. People are making a lot of money because they're selling a lot of stuff. People are spending money left and right for Christmas. So the Santa rally happens, which means the market goes up, and then we hit January and the market should go up even more because of something called the January effect. But we plummeted and we just kept on dropping down, seeing lower lows, and then we hit around December, Christmas time. Market was just plummeting. We thought that's it. The market's going to go down forever. This is awful. But no, then it started to go back up. It took a while to recover. For it to reach that high again was back in May. And then to see newer highs, or to see higher highs, June. So you had a long stretch of, if you invested here, it took a while for you to see your return on investment. But then it went up and it rode up like crazy. And don't even get me started with if we go all the way back to 2008, right? Let's look on a monthly chart just because it was so long ago now. Back in 2008, just picture this. You're sitting here at 156, drops all the way down to 69. You lost half of your portfolio, and that was 2009, 10, 11, 12. It did not reach new all-time highs until 2013. So sometimes this could happen, and it will happen in your lifetime if you're 20 or 30 years old. We will see this massive pullback. We will enter a recession. Don't get scared. When a recession happens, this is when you know this is great. I could work at my job if, as long as you don't get laid off. As long as you have a job, you're one of the luckiest people in this entire country because you're in a recession, still making money, and able to buy these stocks at a discount, not just for a day or two, but for multiple years. What I did just today, I got my paycheck on Friday and I'm like, all right, this is great. I'm going to buy some Apple, buy some Nvidia. Hopefully, I'm hoping it continues to go down over the next week. I get my next paycheck and I'll be even more aggressive and I'll put more money into it. But then chances are it'll bounce back up and now I'm back paying higher prices for stocks. If we could enter some kind of, and I'm not hoping or wishing for a recession, but I'm just saying if a recession were to come and we were to continue to go down for the next couple of years, I'm continuing to buy my companies that I love, that I know the fundamentals of, and I know inside and out at a lower and lower price. Because then once you finally hit that bottom and it starts going up again, you're gonna make some massive gains. But next time you open up your account and you see you're negative $80, $800, or $8,000, if you're 20, 30, even 40 years old, don't get scared by that, okay? Don't let emotions play into it. Your goal should stay the same. You're gonna invest in high quality companies. As long as the fundamentals don't change and as long as you don't need the cash, don't touch it. Just wait it out because you will see the market will bounce back. It always has. There's never been a time in history where it hasn't bounced back, okay? So you just gotta stay the course, stay calm, and when the market goes down, it's discount season. You buy into more stocks. It's buy low, sell high. Sounds easy in practice, but now that you guys are experiencing some major pullback, you see it's a lot harder than what it actually is. Your emotions start to come into play. You gotta fight those emotions, Just stick with the plan, and that is what has made people millions and millions of dollars over the past couple of decades. But that's all I got for you today. I hope I was able to drill that into your head, and now you know when the market goes down, don't freak out. But other than that, hit that like button, subscribe if you haven't already, drop any comments if you have any questions, and I'll see you in the next one.